Hi, today is Tuesday the 28th of September and this is a weekly recap. I recorded one last night, Spanish time, but for some reason it didn't record or something happened. So this is the October trade. As you know, there is no downside risk whatsoever, and this is good because with lower volatility, of course everything is relative, a short-dated expiration would be somewhat impacted by the roller coaster we've seen last week. As a matter of fact, the roller coaster is back into force today. As you can see, this is the CFD IB US 500. The market is aiming down and probably for this area. Anyway, back to this one. So that is why also on Slack I stopped posting screenshots. This one may actually go to expiration. It's worth less than 10 cents. I may close it for 5 cents to release some capital, but that's not exactly an urgency. Let's go to November. November last week went through a roller coaster and I realized that the trade was too sensitive. And when the trade loses its initial resilience after 56 or even 60 days, those things happen. So that's why I actually reconstructed the trade, and now I am probably willing to go for the sweet spot scenario. Sweet spot being extended into the higher part of the tent. We'll see how things go, but it's likely that we'll have a more agitated market for the coming weeks up to the next FOMC and earnings in about 4 weeks' time. Last week I added a lower based bargain butterfly to be safe. Maybe not at the best time, but that's okay. So I believe that, of course, the T+0 will sink a little when volatility goes up. And as a matter of fact, it was positive. Now I'm losing just a little bit. And that is normal at this stage of the trade up to 30 days. And generally, if you follow my style of Rhino, you know that I tend to forfeit theta by also reducing gamma and preserving my flat to negative delta T+0. So on this one, a little bit of a drop, no big deal. Delta will remain flat for another 100 points. So we may have another episode of T+0. I wouldn't call it sinking, but going down a bit. If we were around 30 DTE, and as I believe the roller coaster probably will be more intense towards mid to end October, by that time I believe the trade, if I let the delta, negative delta build a little, it should be behaving better. This one is mid-October, T+17, it should be looking better. So I am somehow inclined to do nothing. Maybe I will roll down the CCS to get a little bit of credit, because I believe the IV skew is in our favor anyway. So on this one I will probably do little after the major reconstruction. Not that major, but I actually scale down and put back the same lower butterfly, broken butterfly last week. Now for December is more resilient. I started early on this one, and I believe this one is still resilient. It's still got a bit more of negative delta, so that's probably good for the equity, even if I don't believe I will get to this level in case the market drops. It will probably still drop a little bit, but it should stay positive for a long while, probably if the market drops like 200 points. So I am not too worried about this one. I added a broken butterfly yesterday, so we are now 3 broken butterflies and 2 CCS. The CCS are doing okay. Sold them for $1 and now they're worth about 70 cents. So they do contribute to the small profit so far. It's too early, of course, to roll them down. I placed them a little bit more aggressive than I usually do. If you look at the IV skew I post on Slack, it was really borderline on the flat part of the skew. I will probably leave it there. Of course, it could be tempting to maybe add another CCS here, basically widening this one. that could be helpful in terms of redistributing Vega if the market drops pretty sharply. So maybe some fine tuning. I will probably build opportunistically if I see the volatility going back to 22, maybe all the way to 25. Of course, it will be an incentive to add to the trade again, like I did when I entered this trade early. But I should remain cautious. We all should remain cautious. The market will be quite agitated. Market can drop 100 points and go back up 100 points. So this makes this OTM, more conservative broken butterfly type of Rhino, easier to manage in these very uncertain times. So that is it for now. As I said, that would be a fairly short video. I do not expect, at least until Thursday with GDP, I will probably do very little. As I said, maybe some minor tuning, but very little overall. I know my margin to equity ratio on the PM account is very low. I'm below 25%. I should aim for 35, but and of course, yesterday I put capital to play maybe a little bit too early, although this is not a major issue. So of course, I will try and get to my 35. So I will probably put a little bit more capital into December, but I'm inclined to wait until GDP at least. Thank you for watching. More updates on Slack as usual. So have a good day, have a good trading week, and see you next week. Bye for now.